Hello traders, this is Rich Dare from Tradesight. This is the market preview for the coming session, Wednesday, March 13th, 2013. Today's session was one that we kind of seen dealt in the cards as of the previous preview. We had pretty much a distribution day here. We're down 4 handles on the S&P side, about 8 on the NASDAQ side. The market internals had finally recorded a negative of enough stance, and it did kind of set the stage here for a reversal. We did see some downside activity for the first time in many days, and there's definitely something here for the bears to build on. It doesn't mean that we're necessarily just going to head right down tomorrow, but the bears do have something here to work with and can get active and definitely change the color of the tape. We'll look at the internals again a little bit later, but first of all, let's take a look at just the overall landscape as far as the headlines go. You know, like we said, the futures were down on both sides here, the ES and the NQs. The only standout was the Dow, which basically held its ground on the day. 14,450 was the close, so that was the only one that really held up. Everything else was fairly weak to different degrees. As far as the commodities go, oil was higher on the day, and that was the only real bright patch. The gold futures were higher on the day, but that was really more of defensive posturing, as were the TLT was higher on the day as well. TLT and the gold shares were both things that we played along profitably in Tradesight today, so those definitely worked out based off of our analysis from the previous session. But let's move on to the major charts of the ES and the NQs now. All right, so here's a look at the ES futures. We just recorded that 13 exhaustion yesterday, and today we definitely saw some distribution today. We basically had an inside day, more or less. If you look at the candles here, we didn't really get above yesterday's high. We didn't really get much below it either. So basically just pretty much contained within the prior day's range, but definitely something for the bears to work with if they so choose tomorrow. Key levels to watch: the 10 EMA that's rising here, which is above the previous high, is going to be a key area. And obviously this 2-day low here is also going to be very important for the ES futures. Moving on to the NQ futures, NASDAQ was still contained below that key 8/8 level in the GAN box here, 28.1250. Still grinding below that area and above the 10 EMA. So right now we're trapped below those two key levels, and if we resolve that one way or the other, we should have something worthwhile, and it's definitely something that should be tradable. The low of the day was the 10 EMA, as you can see that, so that's definitely in play, and certainly make sure you have that level available to yourself on your charts. Now, as far as the major sectors go, we definitely did see a little bit of a turn here. We saw some profit taking in some of these previously leading sectors. Saw some downward action here in the banks, and some of these other sectors are starting to take a little bit of a pause here. The BTK was not really doing anything too special today, as well as the SOX. The real standout today, though, was the XAU. You can see that's starting to turn up here. This is the one that we had targeted yesterday for a long today, looking for kind of a rotation into more defensive positions. One day doesn't make a trend. Now that we have a little bit of an up move in the XAU and a little bit of a down move in the banks, but we have to see how this all plays out. So definitely be prepared for more of this. And if we do see more of this, let's get on board and not hesitate to trade that. Here's a look at our total put call ratio, which unfortunately still remains fairly neutral. If we did get that climactically overbought reading down here in the 0.5 area, that would be really enlightening and really give us something to dig our teeth into on the short side of the market. But we're not seeing that yet, but we're standing by and waiting for it. So keep an eye on this one. All right, so here's the SPX versus the SOX versus the NDX, which has just recorded a new nominal high, which is good because this is really just turning into this distribution pattern here, this consolidation here. So potentially pivoting higher here, but I just want to refresh you here that we have a major level just overhead here. If we flip to the weekly, you can see a little bit better. So we got to make sure that we get back and above that, and we're still negative until we really get back above that. At that point, we should see some much better momentum in the SOX and the NDX. Haven't seen it yet, but if this does develop, that would be a very bullish event for the market overall. All right, here's a look at the NDX versus the SPX. That'll be the NASDAQ versus the broad market. Right now, we're still in this negative trend. It's still pretty brutal. NASDAQ still has relative weakness for a variety of different reasons, but until this really turns, the momentum is still going to be fairly muted in the market. If this does turn higher, then I think we'll see some much better momentum in the market and probably see some more aggressive and like parabolic buying in the market, but we haven't seen it yet. The key to this is going to be the SOX that we just looked at before this, that cross breaking out above that level. If that does happen, that'll really start to fuel the NASDAQ overall. But until we see that, we're still kind of in the waiting room. All right, so here's our risk on risk off metric in the SPX versus the TLT. We had noted yesterday we were up against this this upper regression level here, which is going to be key resistance, and certainly that played out in our favor today, having spotted that. The TLT definitely outperformed the broad market today, as you can see by this starting to retreat here, this ratio starting to retreat. There's a lot of room here, though, if this wants to decline and make a full recharge all the way down to the lower level here of this channel. So if this does happen, we're going to continue to look at the TLT on the long side and be very, very skeptical of long entries in the broad market overall. Here's a look at the advanced declines. The advanced declines didn't make any progress today, and in fact, the advanced declines on the NASDAQ side were really fairly weak. We're minus 500 issues or so on both sides. So we saw a pretty good hit here to the cumulative advanced decline on the NDX side. The New York Stock Exchange side also was lower. So this is definitely a cause for concern here. If this continues lower, this is the one standalone thing that you do not want to fight. If the advanced declines are rolling over, the market will go lower, period. So definitely keep an eye on this. Definitely need to see some recovery in this and get this line looking a little bit better. If this continues lower, we're in for trouble in the markets overall, and definitely going to be looking much more aggressively at the short side if this continues. Now our 10-day trend is still oversold in this reading, which makes the market overbought. Remember, this works contra to the market. So there's definitely still plenty of potential for more downside in the market until this condition corrects itself and gets at least back to the midpoint here. So right now the market still has overall overbought energy in it, which can be released to the downside in the form of a downside reversal in the overall market. So we're going to track this every day until this comes back to a more normalized reading. All right, now on to the individual sectors. Here's a look at the XAU, which represents the gold and precious metals miners. This chart has the first decent close above the 10 EMA since late January, all the way back here. This has really been a source of funds for the overall market, but we are turning back to the upside here. We've got this decent close above the 10 EMA. Will follow through, definitely would be very, very positive, and then put this static trend line in play that's got plenty of room to travel to before we get up to this 150 area here for the XAU. So definitely keep an eye on this. Evaluate all these charts for long opportunities. That'd be Royal Gold especially looks pretty decent, RGLD, Double G, Gold Corp, and whatnot. So definitely keep this on the radar here on the long side, even if the market is heading lower, because this defensive sector can do very, very well if we go to more risk-off posturing here. Next best sector on the day was the oil and gas, the XOI. You can see that we do have a secret exhaustion in place here, just above the 8/8 level at 1375. We're now 8 bars up, and this fresh count, 9 bars up, is probably going to stuff it. Once it gets to this 8/8 level. So definitely tread carefully here until we get a breakout and a clean break above this 1375 area without that bar count in the way of this new seeker setup phase, just recently completing the minimum countdown. Stocks was higher on the day, but was still kind of dragging its feet because the market was just so weak overall. It was up less than 0.5%, but it did make a new closing high on the move. However, it did close right in the area of this 8 ace at 437.50. That's going to be a real key area. And even if it gets through that, then we've got this risk level here from the seeker exhaustion, the 13 here, this magenta line that I'm highlighting right now. So that's going to be resistance too, even if we can get through that. So keep an eye on this. It hasn't really shown any signs of activating the sell signal because we have not yet closed below the 10 EMA, the light blue line here. Trend's positive for now. If we close below the 10 EMA, then we're going to really get aggressive on the short side. Here's a look at the BTK, which was higher on the day, but underperformed the market and pretty much closed below the open, which is always negative at range high. Still kind of in the area of the risk level from the seeker. So this is still beneath key resistance in the overbought box here on the GAN frame. So we're hovering around this plus 1 ace level, 1812.50. So really not positive until we get a close above that area and take out this sell signal risk level from the seeker. For now, we're still short-term positive because we're above the 10 EMA. But if we break back below that, this exhaustion warning here will activate itself. The OSX was fairly indecisive, just kind of floating here in this recent range. We're getting close to being 12 and 13 days up in the count, so be aware of that. There's very little risk of a recycle here because we're only 4 days up in the setup phase here. These green numbers. So if we do print this 13, if we can get up high enough to do that, then we will definitely have something to sink our teeth into here for the OSX. The BKX had a pretty weak day. The one thing to be aware of is we do have kind of this king and queen formation here. We've got a pretty strong up day that made a new high. That's the king, and then the queen is basically just the reciprocal of that, covering that entire range to the downside here. So once we resolve this little mini pattern here, we should definitely have something that should be tradable. If we do break to the downside out of this pattern, though, definitely target this 10 EMA because that'll really probably be in play fairly quickly here. These range high king and queen candle formations like this are typically very powerful, especially after an extended move like this. This had a very big move to the upside here, so definitely make sure you're on top of that as we go forward here. Moving on to the oil futures. The oil futures on the day were higher, which is a little bit odd, and was the outlier that was something that the bulls could point to as a little intermarket point of strength that a lot of other people might not really be picking up on. We're above the 10 EMA now, a little bit better, which puts the 4 ace level at 93.75 in play. Also note that the 50 DMA here, the red line, is just above that, so that's kind of a dual level right in that area. Gold futures on the day, like you'd expect when the market was taking a little risk, off, was positive. We broke out of this consolidation area. We got a close above the 10 EMA. Definitely something for the bulls to build on here, and we could be building a little bit of momentum here to the upside here. Keep an eye on the MACD here, which has crossed for the better. We're still miles away from a zero line cross to the upside here to develop any real momentum, but we could have some rapid price advance here if the market seems a little bit sloppy and traders are looking for a little more defensive posture. And keep in mind, there's still a fair amount of shorts in the gold trade the way it's been playing out, so this could easily have a burst on some short covering if the tape would allow it. Well, that's going to be it for this evening, and as always, thanks for listening. This has been Rich Derrick for Tradesight. Talk to you again soon.